Hi there, and welcome to tradevest.eu. We bring you your end of November crypto sentiment briefing. We are standing in the ashes of the sharpest correction of this cycle. Bitcoin, 29% from its October all-time high, total market cap shed over $1.3 trillion in 30 days, and the Fear and Greed Index hit levels not seen since the 2022 bottom. Yet every single high-conviction indicator I track is now flashing the same message. The low is in, or within days of being in. January 2026 is setting up to be violently bullish. Let's go through the evidence layer by layer. 1. Sentiment extremes. Crypto fear and greed closed today at 28 fear, up from 13 extreme fear last week, and the lowest readings since March 2020 and November 2022. Every single time the index spent multiple days below 20 this cycle, Bitcoin delivered plus 60% to plus 140% returns in the following 60 to 90 days. We are leaving the capitulation phase and entering the nobody believes it yet phase. 2. Institutional and on-chain evidence. November saw record Bitcoin ETF outflows, $3.8 billion left U.S. spot ETFs. But look closer, the last 3 trading days flipped to net inflows again, led by BlackRock. Binance stablecoin reserves just hit an all-time high of $51.1 billion. The highest dry powder reading ever recorded. Long-term holders moved 850,000 BTC in the last 30 days, classic accumulation behavior at cycle lows. Miners flipped net positive accumulation for the first time since early 2025. These are not retail panic moves. These are the exact fingerprints of institutions buying the dip with both hands. 3. Derivatives reset. Complete perpetual funding rates are neutral to slightly negative. Shorts are now paying longs. Aggregated long-short account ratios on Binance, Bybit, OKX sit between from 1.6 to 2.17. Traders are aggressively net long again. Open interest dropped 35% from the October peak. The leverage flush is over. The market has been professionally cleaned out. Exactly what you want to see before the next leg higher. 4. Rotation setup. BTC dominance rejected 61.4% perfectly and is rolling over toward 55 to 56%. Altcoin season index climbed from sub-40 to mid-40s in 2 weeks. When dominance breaks downtrends from these levels in the post-halving year, altcoins have historically outperformed Bitcoin by from 3 to 8 times over the next 3 to 6 months. The January 2026 thesis, tradevest.eu, highest conviction call of the cycle. We have extreme fear capitulation, checked. Institutional accumulation at scale, checked. Leverage washed out, checked. Record sideline capital in stablecoins, checked. 87% market probability of a December Fed rate cut, checked. Year-end tax loss harvesting ending in 30 days, checked. Historical post-Thanksgiving seasonality, strongest 2-month period in Bitcoin history, checked. This is the textbook setup for the fastest rally of the cycle to begin in December and accelerate through January. Price targets for Q1 2026. Bitcoin conservative, from $28,000 to $135,000. Aggressive, my base case, $50,000 to $165,000. Altcoins, quality large caps and narrative leaders, plus 150% to plus 400% from current levels possible in the first 6 weeks of the year. If you have been waiting for the buy the blood moment, congratulations, you are living in it right now. Load quality assets aggressively between 88K to 94K on Bitcoin. Do not wait for confirmation above 100K. You will be chasing. This is not hope. This is probability stacked to an almost uncomfortable degree. In summary, TradevestEU targets for January 2026 are as follows: BTC 165, ETH 6,500 to 8,000, SOL 350 to 450. Top 20 altcoins, 2 to 5 times from here. Disclaimer: this is not financial advice.